Right, guys, we have a quick question here from Dylan asking about sentiment. He asks what we should do if we're in a trade and then sentiment suddenly changes while we are in that trade. He gave a really good example of yesterday where we saw that big pop to the upside in dollar Swiss franc after the very hawkish semi-annual testimony from Fed Chair Powell, which he of course delivered yesterday, the 7th of March 2023. So we had a big move to the upside, and Dylan saying that if he got into that on the long side, something happened after that which would have really muddied the waters for him, and he just wants some advice on that. So he explains that after the testimony, we had that big move to the upside in dollar Swiss franc, but then we had some hawkish comments later in the evening coming out from SMB's Jordan as well, talking up the possibility of intervening in the currency market to keep the Swiss franc strong by basically selling foreign currencies. So let me just quickly show you guys what comments Dylan is referring to here. If we just quickly search for SMB, should find it fairly easily. Here we go. So SMB Chairman Jordan says Swiss inflation is low in international comparison, but above the SMB's price target, stability target. Swiss appreciation has protected Switzerland from important inflation. We can use interest rates, but also sell foreign currencies to get the right monetary conditions to achieve price stability, and we are ready to sell currencies. So the question here is, if we would have been long something like dollar Swiss franc last night on the back of those, on the back of that hawkish semi-annual testimony, and then we saw that SNB news hit the wires, what would have been the best course of action to be? He further asks, will comments like these from the SNB, as an example, be enough to change the sentiment on the pair and potentially mean getting out of the trade if you're long? Or would markets discount the info since the initial bullish sentiment from the dollar side of things, from Fed Chair Powell's side, since that was still in play? So it's a really good question here from Dylan. I think the first thing to look at when you are in a trade and news or data comes out that goes against that trade, so counter sentiment comes into play, the very first thing to do would be to ask how the new information or the new data changes the baseline expectation for that asset that you're trading, whether it's a currency pair or an equity index or a commodity, or how it changes the baseline expectation for that particular central bank or the economy, etc. So in this specific case, the comments made by SNB's Jordan, even though it was hawkish from an urgency perspective, it wasn't really a big shift away from what we knew about the bank already. Even though his comments does suggest some urgency in terms of intervention, and of course that would mean selling foreign currencies and buying the Swiss franc. Even though that's the case, intervention in currencies was already something they alluded to previously. If you take a look at this statement, this is their statement from December. And read this sentence: to provide appropriate monetary conditions, the SNB is also willing to be active in the foreign exchange market as necessary. Now, that sentence isn't all too different from what we heard last night, right? He said we can use interest rates, but also sell foreign currencies to get the right monetary conditions to achieve price stability. We are ready to sell currencies. So even though there's urgency in what he says, they did previously allude to that, right? So even though saying, listen, we are ready to intervene, he basically just said exactly what they said at the December meeting. So it wasn't going to change the market's mind about what the SNB will do. It wasn't something new. It wasn't something that goes against the baseline expectation. So, in the context of a possible dollar Swiss franc long, that would not have been enough for me to get out of the trade, to be honest. Asking whether what has been said is new information for the markets, that's a very, very important step. And whether that new information changes the baseline view, that is very important for us to assess stuff like that. In this case, it wasn't really new. It was delivered with more urgency, that's for sure, which was a bit more hawkish, but it wasn't something that we didn't know was possible, especially after the big upside surprise we saw in the inflation data. You'll recall, if we quickly take a look at the inflation data that we got, let me just quickly open this up. you'll notice that big move to the upside in core inflation going from 2.2 up to 2.4%. And the headline inflation, we went from 3.3 back up to 3.4. So with that reacceleration, his comments definitely shows more urgency. So there was definitely, some hawkish elements to that, but it wasn't really new in the sense of, their previous statement, because we know this is something that they said they will be willing to do. The second thing to look at when you are, in a trade and something comes out that could change the sentiment is look at the time frame that you're trading in. If you are in a scalp trade or a day trade, which is purely short term, then even a small subtle shift in sentiment, like those comments from SNB Jordan, is usually a good idea to trim some exposure or get out of the trade. But if you are trading something more medium term, then you could look to just sit through that sentiment if it doesn't change the bigger picture. Maybe you can reduce risk on the trade just in case and see how it plays out. But if it's a medium-term trade, you have more room to run, more room to work with. If the sentiment is not something that changes the fundamental reason for your medium-term trade, and the sentiment is just something that pushes against you in the short term, then you could opt to just ignore it, or maybe lock in some profit, reduce some risk, etc. Obviously, there are things to consider as well, such as positioning, the timing, of other key events in the pipeline, how, of course, how far you are away from your entry when that sentiment occurs. If you got into that trade literally the day of, and then sentiment comes out that goes against it, even if it's a medium-term trade, it might be a bit more risky to hold on to it. But if it's something that you've been holding on to for the last week or 2 weeks and it's a more medium-term trade, then it might be, you might get away with just locking in profit and not getting out of the trade. All those decisions obviously makes it a little bit harder to know what to do, but it's unfortunately it's not a binary thing, right? It's not black and white. There's always going to be gray areas that you need to consider. So in a nutshell, firstly, make sure whether the sentiment is important enough to change what the markets are currently expecting. If it's enough to change what they expect, it's probably best to get out. If it's not, then it might be something you can ignore. Secondly, make sure you understand how that sentiment, if it plays out, can impact your time frame you are trading. If it's a scalp or a day trade, then even marginal sentiment can take you out of your trade, and that means it might be worth just taking what you have and run and trimming that trade. But if it's a medium-term trade, ask yourself whether the sentiment changes the medium-term view, and if it doesn't, ask to where you will allow that sentiment to push against your trade until you bail on the trade. So I hope that helps with the question. Any others, don't hesitate to let us know.